Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, September 6th. U.S. investors are returning to likely losses on Wall Street following the three-day Labor Day weekend. One reason for the negative sentiment may be lingering disappointment over Friday's employment report, which showed 0 new jobs created last month. Later this morning, the focus will shift to the services sector when the Institute for Supply Management releases its non-manufacturing survey. The gauge is expected to show a slowdown in growth, but not an outright contraction. Meanwhile, traders are also getting their first chance to react to the steep losses in Europe yesterday. The weak U.S. employment report and continued concerns about the sovereign debt crisis pushed the Stoxx Europe 600 index down more than 4%, and both Frankfurt's DAX 30 and the CAC 40 in Paris closed at their worst levels of the year.
Today, the major European markets are rebounding a bit, but we're seeing some of the heaviest action in the currency markets. The Swiss franc is tumbling against the euro and other major rivals, including the US dollar. The move comes after the Swiss National Bank set a floor under the euro-Swiss franc exchange rate and vowed to buy, quote, unlimited quantities of euros to defend that floor. This is an extraordinary step for a central bank to take, but analysts say it was necessary due to the massive overvaluation of the currency, which undercut Swiss exports and weighed on equities. The news is pushing the Swiss market index up 4%, and the franc is jumping more than 8% against both the euro and the dollar. But some analysts say the Swiss National Bank's toughest test lies ahead, especially if the European sovereign debt crisis continues to push investors toward assets perceived as relatively safe.
Perhaps the most popular safe haven investment is gold, and investors continue to pile into the precious metal amid all the uncertainty in the global economy. Right now, gold is trading just below $1,900 an ounce, after earlier hitting a new record high above $1,920. Another traditional safe haven is U.S. Treasuries, and despite the sluggish outlook for the U.S. economy, they're just as popular as ever. Following a big jump on Friday, Treasuries are rising again today, and the yield on the benchmark 10-year note is falling below 2%. Meanwhile, assets perceived as relatively risky are taking a beating, and that includes most commodities. Right now, crude oil is dropping to back around $84 a barrel, a decline of nearly 3%.
Today, energy stocks are mostly lower along with the overall market. But one industry player that could buck the downward trend is Sunoco. It's set to open about 1% higher after announcing that it will exit the refining business. Sunoco is also conducting a strategic review for its logistics and retail businesses to determine the best way to deliver value to its shareholders. Things are mostly quiet on the earnings front, but chip maker Altera will update its third-quarter sales guidance after the closing bell. We're also waiting on August sales and figures from Walgreens and industrial supply company Fastenal. We'll tell you whether those stocks are moving and bring you all the market reaction after the opening bell. For now, that's the latest from Weiss Research.